Hello, everybody. Welcome to Tuesday. Hope everybody's doing well. Big shout out to Mr. Hammer and Mr. Meatball out there. Thank you for all you do. So today, and somebody else, the tree, everybody, and thank you to the mods in the chat as well for keeping us all respectful and safe. So today, let me see. I got to make sure this actually. So today, yeah, we got volume good. Crypto market is just shy of 1.2 trillion, 24-hour volume about 33 billion, and price of Bitcoin is just shy of 30,600, kind of hanging up there above 30k. Bitcoin dominance is 50%, and Ethereum is just shy of 1900. Everything is just above or just below these major numbers, which is kind of interesting. But what I'm going to talk about today is kind of the best performing sector is proxies. Institutions are not coming, they're here, and they're buying up any crypto proxies they can get their hands on, even if they're crap. So we'll look at some of that too. And the fear and greed is at 57. And let's go. Institutions unleashed. And of course, this is just a guy on the internet, and it's edutainment. And if you want to amplify your intelligence as well, please subscribe. Today, we will cover 48 mind-expanding nuggets in 30 minutes. So let's go. Now, today, unfortunately, I have to start with the bad news because my deal with you all is to be straight, objective as possible. And I always say we start with what has the most segments. So today, unfortunately, believe it or not, despite the crazy good market, there's a lot of bad news. So let's jump in. Let's look at the crypto market over the last 7 days divided by Bitcoin. You can see it wasn't that good, except for one dark green sign, and that was the dark green patch of Solana, which did gain 17% versus Bitcoin over the last week since I did this last. Let's look at Bitcoin in terms of dollars and everything else in terms of dollars as well. You can see, again, one green patch, dark green patch. Binance recovering a little bit, Avalanche up, but the rest, a lot of red and dark red. Bitcoin fell 1.87% to where it is exactly right now, and Ethereum fell 4%. So Ethereum actually fell faster. The week before, Ethereum had risen faster. So over the last 2 weeks, Bitcoin and Ethereum are really, really steady, and you can see that actually in the Bitcoin dominance, which is also down a little bit from, it was about 51 last week. Now it's at 50. So with that, let's jump into more bad news. Let's look at the stock market as well. A lot of red. Meta was up. Adobe was up, but the rest kind of flattered down pretty bad. Tesla down 4%, Amazon down 1%, Google down 2.5%, Apple down 2.5%, etc. Nvidia flat, which is pretty powerful. And the rest, smatters of green around the place and things that we don't care about. But proxies have been on fire. We'll talk more about that too. Let's talk about the crypto space as well. Because of Operation Choke Point and many other factors, crypto venture capital investment has fallen off the face of the earth, down at literally only $500 million. Compared to last year, it was $21.6 billion. So that is a stunning move. And as I say, no man, no fun. And that's a big problem. And again, a huge part of this venture capital industry is in the United States. And because of everything that's happened with Choke Point, people said, sayonara USA, we're going offshore. So until they figure things out, the money will be on hold. And that is sad for the industry. It's sad for innovation. So write to your congressperson or whatever and say, come on, guys, this Choke Point thing has gone too far. And again, it doesn't really matter anyway. Let's look at some big moves. This chart was alarming to many that came out last night. And it looks at Bitcoin transfer volume, miners to exchanges. A huge spike. 71,000 Bitcoin was dumped or sent to exchanges. And of course, everybody's there, oh no, Bitcoin price is going to tank, etc. But nope, it didn't miss a beat. And this basically means what you have here is a whole bunch of miners have been selling their Bitcoin, no surprise there, but this was a big chunk. And there are many possible reasons for this activity. Maybe hedging in the derivatives market, using that as collateral, moving it as part of an OTC order because maybe BlackRock wants to buy 71,000 Bitcoin, or for many other reasons. We're not sure, but it did not affect the spot price at all. Let's dig a little bit deeper and find out what this big move was about. And this Poolin transfer, it was from Poolin, the big mining organization, and they are the ones that moved it. But the question is, it's most probably gone into the hands of somebody wanting to get some cheap Bitcoin for them to sell later. And they are probably an institution, and it is probably an OTC order. Just guessing here, looking at history, looking at data, that's my conclusion. Anyway, let's move along. Let's talk about NUPL Time. Here, and I did talk about this last week briefly as well, but we were in that optimism phase. And there has been that crazy consolidation, very tight range, like it's literally trading like a stablecoin between 29,600 and 31,400 for the past 19 days. And this is creating an anticipation of a significant breakout. Now, last week it was like the potential of a breakout, but the fact that things are so tight and in such a tight range for a long time, it typically means it's going to pop one way or the other. And with the type of accumulation happening by whales, I'm pretty certain that pop up is going to be to the upside. The market is optimistic. You have all these traditional banks, etc., coming out with $120,000 price targets. You've got people that don't know anything also cribbing the $120,000 price targets. As the guy, what's it called? Something, he wrote a book about my father's money or whatever. He said he's going to load up his truck when Bitcoin hits $1,000. Now he's saying it's going to be $120,000 next year. So it's just talk about these ranges are just so ridiculous. Anyway, I ignore all that noise, but the point is there is a lot of excitement in the space right now. Now let's look at a little bit of bad news, a little more bad news before we get into some of the good news. This is the national payment to income ratio for what people pay on their homes. And you can see here, it is near a record high. So the payment to income ratio is the left axis here, and it is just shy of a record high. And that means people are spending about 36% of what they have to house themselves. And that is a scary situation. But there's more scary situations I'll talk about too, because this all impacts everybody in the economy. But will it impact the Bitcoin price? No. So when people say, well, people have a lot of credit card debt and the interest rates are going up and everything else, is that going to affect the price of Bitcoin? The Bitcoin game is an institutional game. It's not retail driving the price. I want people to get that very clear. So if they see negative social sentiment on Twitter or whatever else, it doesn't matter. It's an institutional game. So it's very important. You want to follow what the big money does. Let's talk about Rivian for a second. I get all the bad news out of the way. I promise I'll be quick. Who cares about Rivian? I don't know. But what is interesting is this thing has gone on a scorcher. I can't remember the exact price. It's up something like 86% in 8 days. Because they had a little bump in production and a little bump in deliveries. But remember, Tesla built about 35 vehicles for everyone that Rivian does. And I think they have a 40-year-old founder as well. And they seem confident. What's going on here? And it shows you that the market is really getting very frothy. Now, we had a really good run over the last 8 months, but people are just buying everything, not only Bitcoin proxies, but things like Rivian too. We'll talk more about Rivian in a second. I think we may have a slide here. It's out of order, but that's my bad. I think it's in the ugly news. I'll get back to Rivian too. But here, this is another one focusing on leading cyclical components of the U.S. employment market. Again, this is happening all over the world. The employment market, the jobs market, the labor market is structurally different because of everything that's happened over the past 3 years. And the economics uncovered U.S. cyclical employment saw its annual growth rate fall to just 0.4% in June, highlighting a very, very significant weakening there. And again, it forebodes where it goes next. Is it going to tail off or just tank right down to that line? I think it will tank right down to that line as well. Another view of this, this is the U.S. cyclical employment without manufacturing, and it is negative year on year. And history says, okay, just history, that a recession could now only be 20 weeks away. 20 weeks. That's all. If this pattern repeats, typically 5-month lead time. Now, again, the U.S. job market is weakening. The economies around the world are weakening. People are hoping for a soft landing. But the Fed is still going to turn the screws. We've got a lot of news coming out this weekend as well, a lot of macro news. So it's important to keep an eye on these things too. Let's talk about another really bad omen. This is called the Red Book. Red Book retail sales fell for the first time since C19. and consumers are taking on less credit thanks to higher interest rates, and also banks aren't lending and they're spending less at retailers. And this marked the start of the last 3 recessions since over the last 25 years. And the US consumer back is breaking, and according to this, recession has already begun. But maybe this time is different. Maybe it's only those people with a lot of stuff on their credit cards are getting smashed. So if you're short on time as well, every slide, every image, every piece of content is not only a podcast, but of course the slide is not on a podcast, but in written form you get on a Substack too for about, I think it's 10 cents an edition or whatever for the year. The ugly news now, things get a little bit worse before we get to some really good news too, so hold tight everybody. Algorand, top DeFi protocol, had to shut down. Basically, it wasn't because of the SEC. Apparently, it's because nobody used it. But anyway, one of the things I do want to showcase is Algorand was always a terrible performer on our SCP profiler. It was down at the bottom, just above Terra Classic. Okay, the very top is, of course, will remain nameless, and the other 26 tokens are in the middle, in between. But I'm glad to see that, and of course we had Scaramucci, the spokesperson for Algorand, built a fund around Algorand, completely lost his shirt. But I'm grateful to see that our models work, and this was predicted 2 years ago. Actually, a little more than 2 years ago. So I just want people to know that I'm pleased to say the models do work, because they look at like a whole bunch of different data points, calculate them all, benchmark all chains against each other. And I know I'm going to get hate for this from the Algorand army, but they already hate me, so it doesn't matter. It's just data and models. That's all we do here. Speaking of data and models, this is another one. This is the what I call raining tokens section. And here, there's the usual ones, but some of the big ones that have huge dumpage coming over the next 10 days. We only look at 10 days. Aptos, massive 32 million coming your way. Sweats tokens on every single week, so don't worry about that. IMX, $12.47 million. Flow, $4.31 million. ApeCoin, and I know a lot of people aped into Ape, $30 million. 1inch, etc. GALA Games, all of these things have horrible tokenomics. You're going to get smashed if you own them, ladies and gentlemen. That's just the reality. Anyway, sorry again if I offended you and you hold any of these things, but I wouldn't touch them with a 40-foot pole. So here we are, back to Rivian. I knew it was kind of there, but what's interesting when you crunch into the numbers, I'm glad Wall Street Journal picked up on this too, a Rivian rally makes no sense unless it raises a lot of cash. And again, Rivian has gone up 84% in the last 8 trading days because they had better than expected production and delivery numbers. But the crazy thing is, they sell a car for $83,000 and it costs $150,000 to make each one. And for every car they sell, Tesla sells 35. So it is, again, a crazy situation. Let's look at some other scary things for Rivian and other competitors. Now we're talking about $83,000 car. Tesla, auto industry killer is coming. It's called, I call it the Model 2. Some people call it the Model Z. The 2 and a Z look kind of the same. But that's going to be coming out for $25K. It's probably going to be built in Mexico. They are laying the first foundations for the new Gigafactory in Mexico right now. And that's going to be a game changer for the industry. The industry is already reeling. I made a post yesterday about that on Patreon. It's absolutely getting smashed. Even electric vehicles are not selling, with the exception of one car. Model Y, best-selling car on the planet. Bar none, but they're going to come out with an even better one. So it's a terrifying time to be an incumbent in the car industry. And remember, Elon as well. I don't know why I put this under the bad news category, the ugly news, but because it's kind of counteracting where Rivian is going. But as Elon Musk says, remember, it's not just about electric cars. It's about the autonomy. And as Elon says, it is an insanely big deal. And that's what really matters. And again, what FSD can do, if you don't have it and you haven't been a beta user and haven't seen the development over the last year or so, you won't get it. But when you do have it and you see the development, it never ceases to blow my mind. Just sharing that information. Now, another news regarding the car industry, and I'll get back to crypto in a second, trust me. But remember, some car companies ask customers what they want. Government Motors is a classic example. They believe they have to build a car for every person. And I go back to Henry Ford. If I'd asked people what they wanted, they would have said faster horses. So again, the average consumer has no clue of what the art of possible is. Therefore, you shouldn't ask them what they want because they will lead you down a dark hole. Anyway, a little bit of history. Let's back to Rivian. They're burning cash. Billions and billions and billions. And unless they raise money, they will be out of business. But that's not the worst. There is another one called Lucid. Even worse shape. And here you see the actual relative performance since August 2022 of Tesla, Rivian, and Lucid. Rivian has made a huge rebound, but is it called for, warranted? I don't think so. Again, markets are completely irrational. But, sometimes if they feel they missed an opportunity to buy, say, a good asset, then they buy the next one in the category, maybe like an Algorand, and hope that that's going to bounce as well. But hope is not a strategy. Sorry for all these harsh words today. Let's talk about consumer credit crunch again and the ugly news from Eurodollar University. The real concern, it's very clear on this chart here, for the US economy and other economies like China, like parts of Europe, is non-revolving consumer credit. And the seasonal level in May actually declined, and the sharp drop was due to fewer student loans handed by Uncle Sam, and other credit sources were also very weak. Basically, crunch is here. Credit crunch we're talking about for 6 months, it is here. In addition, sadly, US consumer owes $1 trillion in debt on credit cards. $1 trillion, ladies and gentlemen. That is insane. But it gets worse. Look at this. They will have to pay 22% interest on $1 trillion. That's $220 billion that the US government is spending $1 trillion in interest right now. And that's a government with 32 trillion in debt. The actual consumer, average person right now in the US, all of them that hold balances on the credit cards and they're paying interest, are paying $220 billion. What did I say there? Yeah, 22% of a trillion, $220 billion. That is massive. Can you imagine not having to pay that and buying Bitcoin instead? That's how you protect your future. You do not protect your future paying off credit card. Well, you got to pay off your credit card debt, but holding balances at 22% is suicide. So, thank God we can get to the good news, ladies and gentlemen. Let's go. First of all, fear and greed. It did fall slightly from 62 last week to 57 this week, but still, we're in greedy territory, and that's very clear from the type of activity you see in the markets. People buying, Rivian going up 85%, but there's more coming too. Bitcoin is back. This is the last 90 days of QQQ, which is the NASDAQ versus Bitcoin. And you can see here it's tailing up and coming up real close again. It's funny how things change in a week. So far over the last 90 days, Bitcoin is up 9.43% and the NASDAQ's up 15.94%. So not bad. They're actually becoming a little more correlated right now, which is not a good thing. We like to see uncorrelated assets so we can swing between each. But anyway, separate issue. Let's talk about Bitcoin balance on exchanges. This is also getting very, very scarce. The balance is the yellow line. It's on the left axis. Now only 11.5% of Bitcoin supply is left in exchanges. This is the lowest level in over 5 years, ladies and gentlemen. That's why you have Poolin probably, I'm just guessing here, doing an OTC transaction with one of the big money shops, money market banks or BlackRock or Fidelity, and they're just buying it direct. That's why it's not hitting the markets. That's how it's not affecting the price. Let's look at some proxy discounts today as well. I was on DCA 2 or 3 weeks ago, and the ETH discount was 55%. Now it's 44.86%. The GBTC discount price was about 44%. Now it's 27%. So, by the way, I do have an ETH trade on. I did swap something for ETH. I won't say what it was because that would be sacrilegious. But I felt, wow, with a 55% discount, it's worth taking advantage of. And so far, it's playing out pretty well, especially when you look at the relative performance of ETH, etc. And I do believe ETH is going above 1900. So let's talk about cycles. Get back to some good, juicy Bitcoin news. And sorry for holding this till the end. Well, not the end. We have a long way to go, but some good stuff. So this is a beautiful chart from Glassnode. And Bitcoin's price has historically followed a cyclical pattern, as we know, of bull and bear phases. What's cool about this chart is the following. Try cast your eyes on those green horizontal lines, red horizontal lines, and blue horizontal lines. And we are currently, well, you could say, maybe coming out of that bear period, that stagnation period. It's probably more of a stagnation period because the price is trending sideways. And this period is often unsettling for investors. I still hear it out there every day. It's like, I'm waiting for 25K to buy back in, or I'm waiting for 19K, or I'm waiting for 15K again. I think there's going to be a lower low, blah, blah, blah. But according to Glassnode analyst James Check, he points out that in previous cycles, Bitcoin's price has often been stuck at resistance points for certain levels of time. For example, during the 2021-2022 cycle, the midpoint was pegged around 30,000. All right, guess where we are now, ladies and gentlemen? 30,000. So we're going back to the last cycle. That was resistance. And here we are again. Sound familiar? Sure does, to me at least. Now, if we go back to, say, 2013 to 2016, you can see here the resistance point was about $425. Oh, the good old days. And similarly, 2018-29 cycle, it was about 6,500. Shout out to anybody who was able to buy during the C19 dip in March 2020. That was a glorious window, but it didn't last long. But currently, the market is consolidating around that 30,000 mark again. And this sets up a very intriguing situation for Bitcoin as we wait to see whether it'll break resistance or succumb to it. Now, I believe, barring any black swan, such as a C19 or whatever else, we are going to go up from here. And I know that from looking at on-chain data and looking at who is stacking and looking at how few people are actually selling. That's the crazy thing. The only people that are selling are the kind of people with less than 10 Bitcoin. Everybody else is stacking right now. Let's look at money flow too. This is the fund flows into ETPs, ETFs all around the world. And digital asset investment products saw 136 million of inflows last week, bringing the last 3 consecutive weeks to $500 million, fully correcting the nasty 9 weeks previous. See how fast things change? Nasty 9 weeks of outflows, all reversed in 3 weeks. That's how quick these things move. All right, so let's look at the breakdown across all the different asset types, and a big thank you to the team at CoinShares that put this together, Mr. James Butterfield in the UK, I believe. Bitcoin remains the top investment choice for investors, with inflows, again, 133 million into Bitcoin. Short Bitcoin saw Bitcoin outflows of 2 million. Again, that's bullish. You don't want people flowing into a short Bitcoin fund. And that is the 11th consecutive week, by the way, of the short Bitcoin fund being drained. Now, Ethereum saw inflows totaling 2.9 million last week, but these inflows were only marginally improved compared to the size of the asset. That is a nothing burger. And the last 3 weeks of inflows as well represent just 0.2% of assets under management compared to Bitcoin's 2%. And Ethereum is also a negative net flow year to date. You can see it's down 63 million. Now, the good news, though, despite Ethereum not doing so well and minor outflows, etc., there were significant inflows into Solana, 1.2 million, XRP, 0.9 million, and Matic, 0.8 million. Cosmos and Cardano both saw outflows. So that's kind of the lay of the land regarding money flows. Always say follow the money. Let's talk about Bitcoin season. We are still in Bitcoin season. We're under that 25 mark, but we're creeping up again, up to 16. It was 14 last week. So we'll see where we go from here. But I think once the rally hits Ethereum, the other smaller altcoins will follow. But some are jumping ahead of time. So let's look at this. This is the altcoin season top alts and who is actually moving. So Bitcoin Cash, we know it's been on a monster run. It still is compared to Bitcoin, up 160%. Number 2 place, obviously, BSV. Is a lot of people out there think BSV is Bitcoin and BCH is Bitcoin. It's not. But despite that, they are FOMOing into BSV, up 50.9% versus Bitcoin. Maker, up 44%. Solana, up 37.3% versus Bitcoin over the last 30 days. And Aave, up 36%. Uni, up 26%. So everything is beginning to turn and outperform Bitcoin. Oh, there's a couple of names here on the right of this chart. Just want to call out Algorand and XRP are not doing too well over the last 30 days. XRP had a big run way back when it wasn't getting a lot of scrutiny from the SEC where other things were, like Cardano, Matic, and Solana. But some of those are rebounding, and that is represented by the money flows, also by this data. So let's look at ETH for a second and see if we can get back above 1900. So we did have a brief period of high fees, and now Ethereum's network is now chugging along at about $2.45 per transaction, which is historically a nice price to pay for gas fees on Ethereum. And Ethereum and wrapped ETH are the two tokens that are responsible for the majority of those fees. So things are looking up, and according to sentiment and according to myself, it's only a matter of time before we get back above $1,900, which will also help the whole Bitcoin narrative and stability in the market. But again, Bitcoin is the star of the show right now. 800-pound gorilla is getting all the attention because of the funds, which we're going to talk about as well in a second. But before we do that, I've been talking about everybody trying to get access to any type of proxy they can. They're even buying a thing called GSOL. GSOL today is up a monstrous 43.3%. This is the Grayscale Solana Trust. If you are in Patreon, you'd know all about it. But here, that is a big, big move. The question is it worth buying? Well, somebody is buying the absolute heck out of it right now today. Somebody out there knows something and they want to get access to this, but perhaps their fund cannot buy straight Solana because it's a security. You can't make this stuff. So they YOLO into this thing instead. It's anyway funny, but we're seeing that all over the place, and that's why it's what I call the institutions have arrived. Let's look at Coinbase, another kind of proxy type play. On Tuesday, today, the CBOE, Chicago Board of Options Exchange, filed for amendments for five Bitcoin ETFs, confirming each and every one of them that they reached an agreement with Coinbase on surveillance sharing agreement, a move that addresses the concerns that the SEC had over market manipulation. You've heard me talk about that many, many times. That was the ace in the hole for BlackRock. And the filings previously had said that the exchange was expecting to enter into an agreement with the Coinbase. So all of a sudden here, we got Coinbase is now a huge institutional play for all of this ETF stuff. That's coming. It's a question of time. I don't know when. I don't know if it's going to be in 6 weeks or 9 months, but in that time frame, I'm pretty 80% sure one will be approved, especially because they approved a 2x levered Bitcoin futures ETF. It's like, how can you do that and not do the spot? It's kind of ridiculous. So there are no more excuses left on the SEC to deny this, especially with the heavyweights in. And BlackRock knows if you're not first, you're last. Shout out to Talladega Nights. But that's going to be critical. But Coinbase, 165% year to date. Massive move. It's more than doubled over the past couple of weeks. I did have a target to get in at 51. I missed it by a couple of dollars. But you can't catch them all. So I don't mind. I don't care. But I don't chase. So that's Coinbase. Now, Vanguard, another institution play. Vanguard here FOMOs into RIOT. And Vanguard now owns $560 million worth of Bitcoin mining stocks. It's pretty much a 50-50 split between RIOT and Marathon digital shares. So who are these guys spending $500 million on Bitcoin miners? Let's jump in. First of all, though, Vanguard, do not look at my videos because a couple of weeks ago, I did my miner composite score. And guess who came last? Anyway, that's just based on relative value and fundamentals, but these big institutions, just like GSOL, they just want on. They don't care what they buy, and they buy the biggest. They buy the Marathons, and they buy the RIOTs. But the other ones, like the Bitfarms and CleanSparks, they're the ones that are the most value out there. They're the most efficient. There's the least amount of market cap for every exahash that they have. They mine an extreme amount of Bitcoin for their market caps, etc., etc., etc. You can check out that mining video I added here. Did it about 2 weeks ago. And now I have 3 separate mining models, all quant-based. All of them point to the same direction, which is great. So I check my quant with not 1, but 2 other quant models too. So let's go a little bit further. Vanguard, check out my videos next time you buy a miner. Next, Vanguard position. Also, they make up a huge amount of the global ETF market. The total market for all ETFs on planet Earth is $38 trillion. If you add up the assets under management for some of the top banks in the world, it equates to about the same amount. This is just the ETF portion, but Vanguard is the heavyweight. They do 25% of all ETFs. iShares, the second biggest circle. That's actually a BlackRock product. And then Fidelity, 2.1 is the third. These players are coming. These players run 38 trillion through ETFs. A Bitcoin ETF is coming. And how much will they allocate? Guaranteed to be at least 0.5%. That's why this time is different. This time is going to be bonkers. So stay healthy, everybody. Watch for the fireworks. Okay, let's go back to BRICS. Another bit of good news today. Apparently, this is from the Times of India, and a shout out to Sanjay as well for sharing. But BRICS plan to float a common currency and India's reaction to it. The point is, we care about India. India is the biggest country in the world, over 1.4 billion people, fastest growing country. The only country that I think is going to have a really strong economy next year in the world as well. But BRICS is Brazil, Russia, India, China, and South Africa. So a lot of nothing burgers, and then you get that huge economy of India. Now, apparently, now I don't know exactly how true this is, but they've discussed the possibility of floating this common currency and having it backed by gold. But no, India is extremely cautious, and they do not want to do it, nor do they want to pony up the gold. And they're also concerned about the impact on the monetary policy and financial stability. And they don't want to, that is, piss off trade relations with the US and Europe and other kind of players. You know, when you have people like Modi wanting to get a Tesla factory in India, moving to this is not going to help them. Plus, they print at least their money supply grows by 10% to support the growing economy, and they want to be in full control of that and not locked down. So that is the whole story so far today. Thank you all for coming. Smash the like on the way out. Hope you enjoyed it. Sorry about bringing the bad news first, but that's the way we do it. Thank you to the 2,000 people watching live. Thank you to the 500 likes. I appreciate you all, and the mods in the chat. And I'll see you all tomorrow. Tomorrow is Face Off Day. You request it, so you're going to get it. Okay, thanks all. See you later.